Investors on edge as oil crosses $100 a barrel, back below that now. The White House says it's short-term economic pain for a big long-term national security gain. Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-host Taylor Riggs, Lou Bassanese, Jackie DeAngelis, and with us for the hour, Fox Business contributor Jonathan Honig. Good to see you, sir.
Thank you.
Well, conflict in the Middle East is disrupting 20% of the global oil supply. Strait of Hormuz remains effectively closed. The White House says rising oil prices are being driven by fear, not fundamentals.
They shouldn't go much higher than they are here because the world is very well supplied with oil. There's no energy shortage at all in the Western Hemisphere. There is massive energy stores around the world. What you're seeing is emotional reactions and fear that this is a long-term war. This is not a long-term war. It's a temporary movement.
In a post on Truth Social, President Trump said short-term higher oil prices are a very small price to pay if the conflict ultimately eliminates Iran's nuclear threat and stabilizes the region. The U.S. energy boom has given America a buffer against global supply shocks, but how much does that matter if the ships aren't moving? This is the crew I want to talk energy with, okay? We're going to go right down the line, mix it up if you want. Jonathan Honig, how do you feel about where oil is?
Well,
today?
Brian, ironically, what often happens in these situations is that oil spikes when the conflict starts and then comes down. We saw that in 1991 with the Gulf conflict, in 2003 with Iraq, and then in 2022 with Russia and Ukraine. So oil has that big initial spike and then comes down. Bespoke had a fascinating statistic. Oil is about 5 standard deviations above its 50-day moving average. So basically, what we've seen in the last 24 hours is a move you should only see something on the order of once every 9,000 years. I do think oil goes lower from here, but I think a lot of the oil companies continue to do well. They're one of the best performing sectors so far year to date.
Jackie, we talked last week about prices for oil. It was $100 a barrel.
For me.
We hit $100. It was for Schaefer, too.
Yeah.
Yeah.
Well, if you were watching...
Are you uh-ohing a lot right now? Are you feeling okay?
No, I think this is what I expected. Where I got a little whiplash was overnight watching the futures prices, as Stu mentioned when he was tossing it to us, seeing the price go all the way up to 119, and then seeing it plummet in a way back down, even though it's still up on the session. This is not a situation for the faint of heart. We knew this as we were going in to this conflict a little bit more than a week ago, and I just urge people to remember that it is only a little bit more than 1 week, and tremendous strides have been made by the IDF and the U.S. Armed Forces. The duration of this, as Chris Wright said in that clip, is key. And I'm just going to keep saying that. Duration is key. Right now, based on the operations, how they've all sort of been playing out, I have no reason to doubt the duration that the administration is forecasting is incorrect in any way. So you buckle up, you hold your breath for 4 to 5 weeks to see what happens. What I'm a little concerned about, I'm not just, totally moving through my day. What I'm a little bit concerned about is this election of the Supreme Leader's son to be the new leader.
Okay.
At first, it seemed like it wasn't going to happen. Then it did move forward. You're asking yourself, well, who gets to pick here, and how are they choosing? And are those people in 4 or 5 weeks even still going to be in power? What I don't like about it is if, for some reason, there's not an opportunity for the people to rise up and have an opportunity to decide what they want, you're going to get more of the same. So after all this destruction, you'll probably have a secret underground situation where the arsenal is just, slowly tried to be built up again. I don't want to see that happen, but I have a lot of confidence in the president, and he told the people, stay home. It's too dangerous right now. I imagine, this is my speculation, that when the time is right and he feels operations are complete, he's also going to tell them now is your time to come out and do what you need to do to take your country back, to take your government back. So, I'm already I'm a few weeks down the line thinking about that and the future and how this all goes.
So in the more immediate future, Lou, you got the pileup of ships in the Strait of Hormuz. Yeah. It's obvious that breaking that logjam is the thing that markets are looking for to say, okay, prices are going to come back down. How do you break that logjam? We've talked about insurance. That hasn't quite done it yet. Throwing escorts out there, but there's a lot of impracticalities with the whole escort story. Saudi Arabia is going to send some of their oil across the country via pipeline to get into the Red Sea. I don't know. What do you see breaking that? You can see it right there on the screen, by the way, just how jammed up it is.
So Jackie and I were talking this on Friday, right? You need to make sure the military threat is gone, because if you start escorting tankers through the Strait, and Iran has some spare missiles that they found that have been waiting for that, and you strike and actually have an impact, it's going to make oil go to 120 plus. But I think you said it best. It's duration, right? It's duration, like real estate's about location. And the market reaction today is really telling to me, because it's showing you this isn't a fundamental problem. You have the G7 countries coming out saying, look, we can add more supply to the market, and prices reverse course almost immediately. So as soon as this military conflict, there's visibility on the end of it, oil is going to reset, and you see it in the futures pricing.
And before we came on, Lou, I was asking you about the curve, so I'm not going to take your data from you, but I think
it's not my data.
Important that as we look out, the prices come down. That is what the market thinks is going to happen.
Yeah, I mean, look, to put it in layman's terms, right, it looks like the futures prices in oil is going to come down sometime by mid to late summer and get back into the 70s. So I would say I'm going to utter the 4 dreaded words on Wall Street. It's different this time, right? Because here's why. 1973 oil embargo, we were a net importer of oil, right? It was an economic heart attack to see prices spike. Now, because we're a net exporter, I think it's maybe your blood pressure's going up a little bit. It's not really going to ruin the economy.
And quickly, just because cars are so much more fuel efficient now, in fact, the average American uses less oil than they did back during that 1970 shock.
So let me connect something here, Taylor. This is my concern. Jackie talked about the new Ayatollah coming in. They say he's a hardliner, okay?
Oh, yeah, you don't want a hardliner.
And, and I guess that means he's going to fight this war to the death or something. But does that put more risk for the Strait of Hormuz? Okay, because is this a guy who is going to look for that opportunity? You lob one missile in there and you get one ship, and everyone else says, we're not going through there. To me, that's where the duration risk becomes bigger, because they say you've sunk most of their Navy, but you haven't got everything, and they'll use what little they have to go after these ships.
Yeah, so for argument's sake, let me take sort of that risky side, because the panel is what I love it, very optimistic, but let me just sort of take the other side of that. The positive side, Brian, the NASDAQ's about to turn positive. Who would have thought that we could do that? But here we go. The downside of this is we've talked about the level of price, and also Lou and I discussed this on Friday, the rate of change. Oil prices are up 50% since the beginning of the year, almost 100% since the beginning of the year. So you have gone from 55 to 100. That's not ever fun, and so I don't care if it's at 90 or 100, but I do care when we've jumped from 55 to 90 or 55 to 100. I think that's why the market's trying to understand, are there stagflation risks out there, which is higher costs. The Strait of Hormuz, not just oil, think about global commodities, think about food, think about goods, think about the cost of a shipping container that's gone up from Shanghai to Rotterdam, from Shanghai to LA, from all over the world, plus combined with slowing growth. So I agree that with duration, Morgan Stanley's one that says if this goes on for a year, which I think is a big if, I think no one is pricing in a year, high oil prices takes off 1.5% of GDP. So that's where you get these rising costs plus slowing growth. And I think that's sort of that stagflationary risk, which is why you have equities selling off. And yes, bonds are selling off when yields are rising as well. I think that's the market's trying to figure out. From an equity perspective as well, I think another risk out there has been airlines. We talked about not just do consumers pull back, but some latest notes here are about the crack spread. That is the difference between the underlying oil price and what these airlines pay for jet fuel. That is now the widest since 2005. The last time it got there after Hurricane Katrina, Delta filed for bankruptcy. Northwest filed for bankruptcy. You have a lot of other disruption in terms of lower cost carriers just halting flights. So I think that's sort of the long-term issue that I think the markets are still very much trying to figure out. That's the Strait of Hormuz, but it's also now what?
Yeah. Let's also think the duration of this new Iranian leader matters most too, right? If we take him out militarily again, I think you get another $10 drop in the price of oil. But you bring up a good point. How do you translate this as investors? One, the NASDAQ almost flipping positive is a testament to the strength and the underlying growth trend in AI and technology, the earnings growth. But then it also raises the question, why in the world would you ever buy airlines? 20 to 25%. Now, Jonathan, I'm curious what you think about this. 20 to 25% of their costs are tied to fuel. Why not just own the commodity itself? Because then you get rid of the rest of the business risk, like Warren Buffett said.
I mean, look, you look at the long-term charts of a lot of those airlines, and they're amazing boom, bust cycles. When they move to the upside, I mean, sometimes it's hundreds of % on the upside. So they've had great periods of bull markets and great periods of bear markets as well. But what's going to be interesting to see, to your point, Lou, is it's not just the impact of higher fuel costs. What if the American traveler, I mean, last year was a record year for of pleasure travel for Americans. If they start slowing down, the airlines are hit even
We're
further.
doing better, and people were traveling during COVID when prices were literally sky high. Now, I know there were stimulus checks going out, so it might have been a little bit different, but the demand has been out there. People are still spending as long as they have jobs. To me, the job picture is the most important part of this. We can weather a short-term oil storm if we have to. We've done it throughout the last 5 years or so. I mean, you've seen Americans be able to do it. That's not to say that it's pleasant. Brian, one more thing. I just want to talk about Ayatollah Jr. if he was to strike a vessel in the... Okay, the way war is being fought because of technology is so much different than it was in the 70s. So it wasn't just the oil supply situation, but the means of fighting is too. I feel if he were to make, or the Islamic Revolutionary Guard was to make a move like that and strike a ship, and that is going nuclear. That's the version of going nuclear here. Far worse than anything else that they've tried to do, because missiles have been intercepted and there hasn't been total, utter chaos. So if they do that, to me, it's a sign of massive, massive desperation.
Yeah, I agree with that. But what changes in our response then? I mean, we have hit them hard all over the place. I mean, we haven't held back. So if they make that move, I just wonder what more do we do? How do you deter something like that?
I'm not the Secretary of War, but my guess is you keep hitting them hard. We've got more ammunition than they do. So that's why I go back to duration, because I think a very calculated aspect of this was how long can they fight? How long can they keep this up?
Yeah.
Their firepower. And I just don't think they can do it past the 4 to 5 weeks, potentially. I think that calculus was baked in the cake when the administration did this.
Real quick, just on gas prices. We've been talking oil prices, macroeconomy. Man, prices have gone up, what, by 50 cents in the last month?
So do you want a few statistics on oil, and then you can get to gas? Brent just had the second largest weekly increase since the Gulf War in 1990. WTI just had its largest weekly rise ever since we began tracking it, well, since 1980, so not ever. So since you started tracking this data, last week was a once in a generation. You pulled your 5 standard deviation. That's a once in a generation weekly move. Now, I could say, does that mean like this is crazy and totally overbought? Maybe, but you're starting to see it at the pump, and that's why I think people are wondering, is this 4 weeks, or is this like what's the stomach and the appetite for the American people when you see massive?
But don't we have to look at today's reaction in the prices? Because we need gas prices to go up another $1.50 a gallon roughly to get to the 2022 record highs.
Exactly.
And there was no major conflict outside. I mean, to this magnitude, right? I'm not going to say that Russia-Ukraine wasn't serious, but you've got a long way to go. And the fact that oil prices have reversed course so quickly, I don't think we're going to stretch that. I mean, you know, some other prognosticators were out saying today that we're going to go to $150 a barrel in oil.
I'm not there in my head.
I disagree completely.
I would also just say
said that.
This is a once in a generation, once in a lifetime conflict. I don't think there has been another conflict as with such severe consequence with respect to how it ends. And so I would say that I think most Americans that are read up, understand what's happening, they can understand that. Listen, we poured billions and billions of dollars over to Ukraine for them to be able to stay in this prolonged war with Russia. A lot of people didn't necessarily believe that that was our responsibility to do, but they do look at this and understand the direct national security threat here at home. When you've got a nation that is working on ballistic missiles to have a trajectory to reach New York City, you have a serious problem.
Well, we shall watch all of it. We were bragging about $2 handle on gas not long ago. We're at $3.50 now. We'll see how that all plays out. Meantime, Taylor, Uber, what's going on?
Fascinating story. Obviously want everyone's reaction, but for my other lady in the room, Jackie, I do this one for you. Uber is expanding women preferences so that if I'm a woman on the app and I want a female driver, I can now do it. This is in response to a slew of accusations. I think it was just last month the company paid $8.5 million for a sexual assault accusation that went through. And so they're expanding it now nationwide. It originally had started in pocket cities. So I think the company's saying in response to a lot of women not feeling safe, if you are this gets tricky, are you the company didn't say this. Are you a woman by birth, or do you identify as a woman?
Hey, you had the best setup, and then you complicated it.
Here, Jackie, look, I'm a woman. I'm on the Uber app. I want a female driver because I don't feel safe, and I get to hire a female driver.
I support this. I like it. My mother compares this to modern day hitchhiking. She's like, you just call up a stranger and you get in the car with them. I don't understand what's going on here. And when I really started to think about it, I said, you know what? You're right. I have no idea where this person, who they are, where they're coming from. So in certain cases, if I had that option, I would take it.
My observation is the supply of female drivers is way smaller.
Less.
So what kind of premium are you willing to pay?
So they said if the wait time is too long, you can shut it off and ask for a male driver instead.
Okay.
But it is the option if someone doesn't come in 5 minutes and maybe you're in a hurry, you could, but
Isn't peace of mind and safety worth the price? A premium
depends
price?
how fast
As
you
a
want to
dad
get somewhere.
As a
I
dad
don't
of
know.
daughters and want my wife to be safe, I'd pay a premium to know that it's a better situation.
I just think it's awesome. I mean, these are companies innovating to meet customers' needs in real time. And, 15, 20 years ago, you couldn't even have imagined Uber or Lyft. I mean, it was something that, everyone essentially having his or her own personal driver. So glad to see Uber taking the customer feedback and putting it into place.
Okay, we'll watch it coming up. Could the tide be turning in the housing market? We'll show you the numbers next.